Hi, well, thank you everyone for being here today. It is a pleasure for me, company TBA Global, to join AliExpress. Thank you so much. Today I will be briefly discussing some topics about tax compliance for your businesses. I believe everyone here has a company, a trader or a company, or maybe is thinking of opening one to start trading AliExpress or the marketplace. So you want to introduce you what does it mean for you? Well, first, I'll talk about our company. I'm Jamie. I'm a senior sales and business development manager at TBA Global. We are also called TBA accountants. We provide tax and cross-border values of all our sellers. We have UK-based or outside of the UK. We work in multiple regions as part of the UK. We also work in Europe, in Asia, the Pacific, and in the US. And what can I say? We have been partnering with AliExpress in 2019, helping navigate many sellers through their compliance, helping comply with their tax regulations so that they can focus on more important things to grow their business. As today we're here to discuss e-commerce, we believe that within the UK, by 2025, the world of e-commerce is going to grow up to 300 billion. You guys can form part of that. But we believe that some of those e-commerce sellers are going to find some issues with the authorities. We believe that at least 42% of those sellers, those new sellers and existing sellers, will face penalties, will face fines from HMRC, and also maybe closure of their business. So it's very important to stay compliant, to follow their rules, and make sure you don't have any issues with it. I'll give you a few tips today to go through that. The agenda today, or the key topics that we're going to discuss are UK tax compliance, UK VAT, UK CA and CE marking, which is about the regulation of your products that you sell in the UK, and trademark, your brand. For the presentation that we have today, I believe most of you are thinking famous. It's really easy to open an AliExpress account. I can start trading straight away. I can even pay my finances with WorldFirst, so I can start tomorrow. But you have to be aware that you have to comply with HMRC, with the regulations, and be on top of that to make sure you have compliance. Let's start with the UK tax compliance. The importance about accountancy. This can be something or a topic that we may not consider because we just look at the big picture. You start thinking about, I'm going to start selling, I'm going to earn up to $1 million in 1 year, and I'm going to start trading on the marketplaces, other countries, and I'm going to be rich within 5 years. But if you avoid following the taxes, following the compliance matter on those transactions, you can face penalties and even go bankruptcy on all your hard work. One of the main obligations that we have here in the UK for your company as tax obligations is corporation tax. Currently is at a rate of 25% for most of the companies, but this can vary depending on the size and the volume of business. VAT is related to 20% if your turnover exceeds 90k. So you have 12-month period to reach up to above 90,000k. That means you must register for VAT and do your declarations. Otherwise, you have HMRC. We have income tax and national insurance for sole traders and partnerships. We have self-assessments for self-employed people. And we have deadlines that you need to meet to avoid penalties or fines. Here are some examples of those deadlines that I just mentioned. There's a filing timeline for companies. You have to file your first accounts 21 months after the date you register with Companies House. Very important. You have to file your annual accounts 9 months after your company's financial year ends. Once you create your company, I'm sure you're aware, they will give you those dates in your HMRC account. And you can file your company tax return 12 months after the accounting period for corporation tax ends. If you miss to do this, you will have some penalty points. If you reach the top of your penalty points, then you will have fines of a certain amount of funds that will go over time. So the more you try to stop paying it, or the more you try to avoid paying it, it will increase interest on it. And last part, but not less important, we have we want to mention the top 5 tax pitfalls that you can find. Some people can mix accounts because you maybe have one company to sell in certain countries or certain products. You maybe open another company to start trading something else, and you end up having like 5 different companies, and you end up mixing those records when you try to report to HMRC. So be aware that can be an issue and have it organized. You can have under-reporting, missing any reporting on time. You can monthly or quarterly, make sure that you submit your reports on time. You have VAT deferment abuse. This is related to the import VAT. So normally when you import VAT, you pay the VAT straight away through customs, but you can delay it 1 month. You can have one account separated. Yes, so it helps you with your expenses to delay those payments 1 month. Taking abuse of that, that's where HMRC come after you and check. Then IOSS versus UK VAT. IOSS is mainly avoiding having a UK VAT. Sometimes when you trade with different countries, and you are not storing your goods there, you pay your taxes on that transaction, let's say, on the way to the new country. But because you are not storing, you file everything under your home country VAT, which is the UK. But if you have both IOSS payments and UK VAT, that means you're paying VAT and tax twice. To avoid that, make sure that you understand what your position is, so to understand to get some guidance. The last one is ignoring data. It's very important to keep records of everything. HMRC suggests for you to keep records of all the transactions you have made for 6 years. We suggest you to keep 7 or 8 years, because if they come after you, they're not going to ask you what you did 2 months ago or 1 year ago. They can ask you what you did 10 years ago, or 5 years ago. And if you don't have the data, the penalty can be very big. So everyone be aware how important this is. Well, VAT. VAT, there are 2 requirements for you to have to apply for that. The one I just mentioned, 90k thousand turnover threshold within the period of 12 months. So if you're starting selling in the UK and you think that you're on the 10 month and you're going to reach 90k on your profits, HMRC may send you a letter and advise you. But if they don't, you need to be aware that you have to register yourself, because you need to start paying or charging VAT on your sales and referring to HMRC as soon as possible. And the other one is if you're a store. If you have a warehouse in the UK, a store in the UK, same as with EU countries, you will need to apply for VAT. Documents required, the main ones that you will need for a VAT to apply for that will be information about your company name, your company address, your certificate from the company's house, some proof that you have been trading. You will need other proof of business, like proof of warehouse. They will want you to see the reason that you need VAT is a warehouse as a UK e-commerce seller. You will have to show some proof of activities, like who is your provider, where you get the stock from, if you have it ready to sell or if you're selling already. Directory information, very important. They need to know. Or ID is not enough. You have to give us at least 2 or 3 proof of addresses. Maybe energy bills like water bill, gas bill, or phone bill. That's really important. And then the last one is your bank details. They need to have your bank details mainly for refunds. So when you receive or you reclaim your import VAT, you pay when you bring your goods here, that goes straight away to the bank account. You have a UK bank account. The duration, as you can see, is within 30 working days. When you apply for VAT, it takes normally about a month for HMRC to review the documents and accept that. It can be delayed for another month if they think something is good enough, and they come back to you and say, oh, sorry, this document is good enough, and you please replace it again. Proof of this or that, and it can delay for another month. But mostly it's normally 1 month. And the frequency, the common one is quarterly. Every 3 months, you have to do your filings, your VAT filings, and send your VAT return to HMRC. But there is also an option to do it monthly. Some companies that maybe have a big volume of sales, they want to do it monthly to pay less amount of VAT. Another important thing that you will need is a UK ERI number. An ERI number is a number specific for import. Customs have to see, you have to know when your goods go through customs to come to the UK. You can have straight away a UK ERI number when you receive your VAT number, which is linked to it. or you can apply for a temporary UK URI number first. Maybe you have issues to import your first shipment, but you don't have the VAT number yet, and the authorities are asking you for that with the application. We can give you a temporary one that helps you with that first shipment, and then we will link that to your VAT once completed. Well, main penalties, as I mentioned, you have some points, which is like warnings from HMRC if you miss a deadline of registration or payment or submitting a return. They will give you like a warning. That's where you use your penalty points. If you do a monthly filing, you have up to 5. If you do quarterly, up to 4. If you do annually, up to 2. But once you reach those warnings, and if you're not aware of that, they will start charging you money for that, and they will give you interest on that money. These are the main things that we have discussed before, the main things that you need to know about UK VAT. These are some keynotes or things that you should know, but that is related to VAT. There are some goods that are 0 rated VAT or exempt of VAT, which maybe you are selling them and you don't have to pay VAT at all for those, so you earn whole profit on that. And as I mentioned before, when you import your goods into the UK, you can reclaim that import VAT only if you have a valid UK VAT number. The way you do that is when you present your VAT returns, you will give some documents and some information about that import and the amount of import VAT that you paid, and HMRC will refund you that. Just to kind of balance, so you don't pay VAT twice. So you have to pay VAT when they come into the UK, VAT will be sell it to the customers. So you can reflect the rates, they go by category, depending on the product that you sell. The most common, almost everything, is 20% right here in the UK. It's for most goods and services. There is also a reduced rate for certain items of 5%. We have some examples here, like energy efficient home improvements, children's car seats, or health products. There is 0 rate in some other products, like books, children's clothing, and certain food items. With those, you don't have to pay any VAT, but you can still reclaim import VAT on those. So as opposed to you can pay, but you reclaim when you import those. And there is others that some items are exempt of supplies, like insurance, education, that VAT doesn't apply. You don't charge, and you don't reclaim. Just to go, same as we did with the UK accounting, some things to avoid for your UK VAT will be late VAT registration. You get notified by HMRC when you think you're reaching the threshold. Don't wait for next month, next week. Apply straight away and get your number as soon as possible to avoid any penalties. Incorrect VAT rate application. They will ask you, depending on the products you sell, how much VAT you have to charge. It's 20%, 5, 0. So if you give the wrong information, that will be penalties. You will have, if you fail to submit a VAT time, if you're not keeping accurate records, as I said, try to keep the records for up to 7 years and keep everything organized. Make sure you have everything if they come to make your door to provide that information. If they ask you that you need to do your filings quarterly, make sure that month, that date, you submit your return time. The last one will be incorrect input VAT reclaims or ignoring Making Tax Digital. Making Tax Digital is a platform or software that now the HMRC is using, which is to control all your activity or to have access to it online. So they only don't want you to keep your records on paper, they want you to keep your records online. So you have to use a software that's compatible with that MTD. So when they want to check on you, they can access that to your software and check all your transactions and the records and that everything is in place. For example, we brought a case study that we had last year with one of our clients. It's a UK home goods brand that in 1 year he was selling for about 5 years, and in 1 year he grew his profits for 1 million, and he came up with a penalty of 20k for HMRC. We found out that he was having issues, he was missing reports, or he wasn't reporting everything that he should because he couldn't or he didn't kept the records properly. We helped him with a solution that reorganizing his tax workflows, how to keep record of everything, which accounts used to pay VAT and which ones know how to keep record. An easy tip is every VAT payment that you pay to HMRC, put as a reference your VAT number. So you have to find it, even if it's yesterday or 2 years ago, you just put your VAT number and you will find all the payments straight away. As a result, we could fight with HMRC a little bit and get him to pay 50% less of that penalty. And in future, because he reorganized his workflow and his accounts, he was able to, in the next year, earn 30% growth of that amount. Because he was paying less taxes and he was getting less penalties. Now, I'm going to combine both UKCA and CE marking. I don't know if you know what this is. Maybe you're aware of CE marking, which is those 2 letters CE that you can find on any electronic item or electronic product like your phone, your computer, your mouse. And it's about the regulation that was called General Product Safety Regulation that was established for the EU countries to make sure that your products comply with all the safety rules and everything that needs to be in place to be sold and put in the market. But after Brexit, of course, UK started to say, well, maybe we don't need that CE anymore, and we're going to make our own, which is UKCA. But it is for the same for your electronic goods. The difference is that the CE covers you in the whole EU, and the UKCA is only for the UK. At the moment, as of today, it's still valid in both. So you can use all your CE label products in the UK and it's not an issue. But we believe that by 2027, because every year they keep delaying it, they are going to force all clients or all sellers outside the UK to change the label on the product and put the UKCA of the CE. I guess every seller is still fighting with them, but we'll see what happens. Main consequences that will happen if you don't comply with that, they can fine you, you can have legal penalties, product recalls. When you import your goods and at customs, they will stop them and you will refuse entry, and you will return them back to the provider. Or also it can damage your brand reputation. If you don't do that on time, any sellers that are forced to buy in a marketplace like AliExpress or Amazon won't buy your products because they're label. And the last topic that we're going to talk about today is trademark. That, as we say, your brand is your business, so you should protect it. This is like when you were young and you worked so hard for something, either at home, with your friends, or at school, and someone takes credit of that, you feel very miserable. So you don't want that with your business. This is the thing that you work for the most. These are the types of trademark that you have. You can have a text or slogan, like a phrase or word, an image, as a picture, or a logo, which combines both picture and image. You have the 3 of them as a trademark, like McDonald's has. You have to register those 3 as different trademarks. You cannot combine and just have one. Someone can, even though you just have the logo like M and McDonald's, like it says in the picture. If someone register on the other side, yes, McDonald's, maybe they can steal the brand from you. So you have to make sure that whatever logo or trademark you're using, you register properly. Some risks that you may have is imitation. Some competitors can see that your product is doing really well, your brand is becoming famous, and you don't have it registered. What they do is they will start from the beginning, from very, very small. They will register or try to register an imitation name or brand similar to you that it gets approved by the government or the authority that deals with this. And once it gets approved, they can come back to you and say, sorry, he's selling my trademark, it's similar to you. What the authority will do is really stop your brand and make sure that he's continuous. You have to be very careful with this. Legal vulnerability, like you cannot defend yourself. Even that you can prove that I've been selling for 10 years or 10 years, maybe you lost your case. You have to face it. And lost brand value. Same as before. It doesn't matter that your brand grows very much. Someone will steal it from you and your brand will be nothing forever. And we had one of those cases that it was similar. It was a UK seller that started to sell 2 years ago, and it was selling like toy cars, and it was becoming very famous. So the children wanted to use this type of product. And someone started like a few months ago selling the same type of products, and the name was very similar. For example, it was Carto, like one letter. I don't even know why it got approved by the authorities, but it got, maybe because of the design. But his trademark, the new one, it got approved, and then he came into our client and tried to ask him to go to court, defamation, using copyright, everything that you can imagine, and he won the case. So the client that started to sell his idea, his toys for 2 years ago, he had to rebrand everything again. So lost of value, of name. Also, he has to change all his brand and start from the beginning. So all the work that he had put into his dream or his business, it was lost in a few months. The good thing about trademark is something that you register and it's valid for 10 years. So you don't have to worry about for 10 years about that. You just register the category of the product that belongs, the type of trademark that you have, and that's it. You can do this in the UK, but other regions like the EU, one, for example, trademark is valid for the whole EU, same like in the US. That's all from me. If you have any questions, you can have them here or there. Yes, please.
Hi, sorry, I got 2 questions about the CE and the UKC standards. One question is like, how can we get these standards? I'm sure that's not something that you just print on your package. The second question is, see if I order something from the factory and they say they have the CE or UKC, how do I know they're not faking it? Like, how do I verify that?
Well, good question. If you, for example, with CE marking, you can only put it if you have a CE certificate. A provider like us or someone that provides that type of services will have to first ask you for a sample of your product, have to test it in a way that maybe depending on the type of product that you have. And then they will give you a CE certificate that will have the stamp and all the regulations needed for that paper. So if someone asks you if that's good, you will have that CE certificate and a declaration of conformity signed by that paper. And the UKCA will be the same. To ask some testing, you will receive the declaration of conformity, and then you can go to the UK Gov website, UKCA market, you can write it there. There's an option where you get the label.
Is that certain like institution who will sign this to certificate?
Yeah, like ourselves, for example. We provide us.
Okay. Thank you.
Thank you so much.